Welcome back to the Neuro Finance Masterclass. So, you've done the work, you've got your freedom number, but the path to actually getting there, it isn't really about spreadsheets. It's about psychology. The journey is never, ever a straight line, mostly because our own emotions love to get in the way.
That's exactly right. The greatest battle you'll ever face as an investor isn't with the market. It's with the voice inside your own head. The greed, the fear, the panic. If we really want to master our finances, we have to get a handle on our own minds first.
So how in the world do we make sense of all this emotional chaos? Well, Wall Street has a kind of shorthand for it. Two animals that perfectly capture the market's two main psychological states. And to win this game, you have got to understand the mindset behind both of them.
And the imagery here is it's so perfect, isn't it? A bull attacks by thrusting its horns up, which represents a rising market. And a bear? It swipes its massive paws down for a falling one. These aren't just some clever Wall Street terms, they're really metaphors for the collective emotions that literally drive our financial world.
Okay, let's start with the bull. Everybody loves the bull market, right? The numbers are all green, your portfolio is growing, and it feels like the party is never going to end. But, and this is a big but, this is without a doubt the most psychologically dangerous time for an amateur investor.
So a bull market is pretty straightforward. The economy's booming, everyone's feeling confident, and stock prices are just climbing up and up. This whole environment creates a very predictable psychological pattern, one that feels amazing in the moment, but is actually setting a huge trap for later. And this, right here, perfectly illustrates the trap. Euphoria kicks in. You start to confuse a rising market with your own personal genius. Suddenly, all that discipline you learned just goes right out the window. You start taking massive risks, buying into whatever is hot, paying way too much for assets because you're absolutely convinced you can't lose. You forget all the fundamental rules.
Remember this. That feeling of being a financial superhero, that feeling that you've got it all figured out, that's the final warning sign. It's the quiet right before the cycle inevitably turns.
But after that wild party, the cycle always turns. The bear arrives. And while most investors are panicking and running for the hills, the disciplined investor, well, they see something completely different. They see the single greatest opportunity to build wealth.
This number is a trigger. Once the market drops by 20% or more from its highs, it's officially a bear market. You'll see this number plastered everywhere. News channels will be screaming about crisis and collapse, and that amateur who felt like a genius yesterday, now they're totally paralyzed with fear.
This is the question that separates the amateur from the professional. The amateur's emotional brain screams, "Yes, it is, sell everything, get out." The disciplined mind, however, asks a different question. It just pauses, takes a breath, and reframes the entire situation.
And this is the crucial reframe. A bear market does not mean the world is ending. It means the world's greatest companies are on sale. Seriously, think of it like the Black Friday of investing, where the best assets you could ever want are suddenly available at a massive discount.
Now, this isn't just some clever saying. It's a fundamental truth of creating wealth. Buying quality assets when they are cheap is the most reliable path to financial freedom. The panic of the crowd becomes the opportunity for the disciplined. This is the exact moment savvy investors have been waiting for.
So, how do we navigate this? How do we conquer the euphoria of the bull and the absolute terror of the bear? We don't. We defeat them by refusing to play their emotional game. We implement a system.
The key is a system called dollar cost averaging, or DCA. It's so simple. You automatically invest a fixed amount of money at regular intervals. This system is your shield. When the market is high, your money buys fewer shares. But, and this is the critical part, when the market drops, that same fixed amount automatically buys more shares at a discount. You're not trying to predict the market. You're just consistently riding the waves.
This is the essence of neurofitness. Your system doesn't care about the scary headlines. It doesn't feel fear or greed. It just executes, day in and day out. By automating your actions, you literally short-circuit your emotional brain and allow your logical system to do the work, turning market volatility into your greatest advantage.
Okay, so the system is your tool, but the ultimate weapon is your mind. Your cognitive task for today is to prepare yourself for the inevitable financial winter. You have to forge your mental armor now before the storm actually hits.
This is your mantra. I want you to internalize it. This single sentence is your cognitive shield. It's a pre-commitment to discipline. It acknowledges both of those psychological traps and prepares you to reject them. Repeat it until it becomes an automatic response.
So here's your final action plan. I want you to write down that mantra and put it somewhere you'll see it every day. First, you have to accept that crashes are a normal part of this journey. They're going to happen. Second, when a crash happens, do not look at the news. Just turn it off. Starve your fear. And third, look at the discount. The battle for your mind is the only one that truly matters. So, are you prepared to win it?